What's going on, everybody? It's Stas here. Welcome back to another video. So a decent day in the stock market today. S&P 500 down 0.06%, Dow Jones up 0.3%, and the Nasdaq 100 went up 0.1% as the Russell 2000 led the way, up almost 0.6% on the day. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over a bunch of stocks that I'm looking to buy right now. And I want to share with you guys what I've been doing in the stock market, an earnings report from DocuSign, and in general, where my head is at as a trader and as an investor. So if you guys find value, hit that like button, subscribe to the channel, and don't forget to get your 4 free stocks from WeBull down below. And let's get right into the video. So S&P 500, it hit another all-time high today, 3682.73. That actually came with about 35 minutes left in the markets here. And you guys can see what happened after we hit that all-time high. It went down about 25 points in the snap of a finger, down almost 0.7%. And why did this happen? Well, Pfizer came out and said that they're slashing the CVV shot rollout target after facing supply chain obstacles. And this is a blow to the market, no doubt about it. It's not going to cause the market to crash 20%, 10%, but it could cause the market to see a bit of volatility in the short term, which is why we saw the big drop here after hours, the sudden recovery you guys can see here on the intraday chart, or not after hours, heading into the close, right? We saw a big drop, a sudden recovery, followed by another big drop, followed by another recovery, right? So this news caused a ton of volatility, and it's because the market is heavily relying on this V-shot, right? Because the V-shot is kind of what's between us as a society and a normal life. And it's also between the economy getting back to normal or suffering more than what it's already suffering right now. Because what the V-shot does is it puts confidence back into the consumer, right? It makes consumers want to go out, spend money, and have that money circulate around because people are going to travel, they're going to go here, they're going to go there, they're going to go shop at this store, shop at that store, stimulate multiple types of businesses. So this is pretty big news in the short term, I'd say, from Pfizer, although I don't think it's going to cause a collapse in the market. But like I said, it's going to cause some volatility in the short term. So we saw an all-time high followed by that big drop. And despite this drop, we're still in an uptrend. What you guys can see here on the hourly chart, we are still in an uptrend on the S&P 500. We closed above the old all-time high at 36.45. As long as we do hold that old resistance as a new support, the uptrend is intact. And we're over this 50 SMA here on the hourly chart, which is very good news. And going back to the 5-day 5-minute, well, it's good news for the bulls at least. And going to the 5-day 5-minute here, what we're noticing is we're kind of in this little channel range, whatever you guys want to call it, on the S&P. And this is what I'm kind of looking at for the rest of this week, tomorrow and heading into next week, right? Do we break out of this resistance, right? Maybe hit another all-time high. Do we break the support of this little channel range that we held heading into the close of the market today, which could lead to further selling? That's what I'm looking at this point for direction, right? So watch 36.60 on the bottom side. If that breaks, we might be filling the gap down to 36.45. And let's say we pop out into 36.70, we might fill the gap up to 36.82 and maybe break out of that resistance and maybe go to a new all-time high. And again, this news from Pfizer, you need to keep an eye on it, guys. See how it develops. It's fresh news. Who knows? The market could sell off tomorrow due to this. But overall, I don't think we're going to see a downtrend because of this. If anything, we just might see short-term volatility heading into tomorrow, maybe early next week. But overall, I think the market will probably snap back. That's kind of what I think. And we'll see how it ends up going down. And let's pull up Pfizer's chart really quickly. I mean, take a look here at Pfizer. It tanked as well. Earlier yesterday, actually, it was at 41.50, and now it's at about 39.80 after hours. And you guys can see here on the live news tab all this stuff that's coming out about the V shot, right? You can see here that the shares are trading lower on the company, because the company's facing supply issues. It cut its shipment, or it cut its shipment outlook, which is not too great. So watch for some short-term volatility here. When it comes down to SPY, the ETF that tracks the S&P, we're noticing, okay, all-time high was hit 368.19. We're at a resistance at about 367, 368. We failed holding out of that resistance, right? So now we're trading back above the 366 support. So we're pretty much in this little 2-point window right now on SPY. Excuse me, guys. And this is kind of what I'm watching for direction, right? Are we going to break out of 368? Are we going to break and gap under 366? Either one of these scenarios is obviously going to play out, and from there, we'll see what direction ends up, picking, right? But overall, I'm still bullish on the market. The trend is still bullish. We actually held a higher low today at about 366. We rallied into the close, so that is a pretty good sign here on SPY. And when it comes down to the Dow Jones Industrial Average, what we're noticing is a strong resistance at 30,100. I mean, take a look here, guys. We literally hit 30,100 on the dot, which is that all-time high, and we failed breaking out. We actually got rejected, and we sold off into the close. So you're noticing that we're seeing big troubles, or not really troubles, but resistance at 3,100, but we're also holding this uptrend here on the hourly chart above the 50 SMA, the 180 SMA, and this overall uptrend trend line that I have drawn here, and 29,900. So overall, yeah, we're seeing resistance at the all-time high, but we're still uptrending into that resistance. So it's kind of like an ascending triangle, if you may, here on the Dow Jones. So I think overall, we could squeeze out of this. And honestly, this V-shop news is probably going to hurt the Dow companies more than, let's say, the tech stocks out there. I mean, heck, it might help the tech stocks if, we stay in this lockdown and this, environment that we've been in longer, right? That's going to, help the tech stocks, if anything, guys, right? So watch out for 29,900 on the Dow Jones. If that breaks, we will break the uptrend here. We could be going lower, but if 29,900 holds, which it is at this point, we rally up tomorrow, next week, we break 3,100, then it might end up breaking up higher, right? All-time highs will probably hit, and the ascending triangle will probably play out at that point, which would play out if it breaks out, right? So Nasdaq 100 today, up 10 points, up 0.01%, also hit an all-time high, up to 12,538.92. And at this point in time, guys, we are a bit overbought. Our size at 75. It seems like we are holding the old resistance as a new support today at 12,450, 12,460, right? You guys can see we held above it. But honestly, guys, I would love to see a pull down, a sell off, a cool off here on the Nasdaq, probably down to about 12,300. I've been talking about that the past couple of videos. I'll say it again. That would bring the RSI down to a healthy spot. And we have to see pull downs once in a while, guys. Things can't go up and up and up without pull downs. And we've seen the Nasdaq go up a couple days in a row here without really any significant pull downs. So yeah, I mean, if 12,500, 450 fails to hold tomorrow, I wouldn't be surprised if we went to 12,300 and maybe bounce back up from there. So let me know your thoughts down below in the comments on everything going on, the markets, the V-shot news, Pfizer, all that good stuff. Are you buying stocks? Are you selling stocks? And now let's talk about what I did, which honestly, guys, I took some profits today, right? Again, the Nasdaq's a bit overbought, so I wanted to sell out, trim a little bit of my tech positions, not Apple, but Facebook. I actually got out of Facebook today, guys, at about, 283? Yeah, I got actually out a bit under from where I actually locked in profits a couple days ago. If you guys remember, I originally got into Facebook at 277.5, locked in half of the position at 285.55 a couple days ago, and now I literally locked another half, which my whole position is gone now. I locked the rest of it at 283.80. So I would have made more money if I just sold the complete position when I sold the first half, but hey, you can't always, win every single. I mean, I won the trade, but you can't always maximize your profit. And if that makes any sense, right? Especially if you're locking in different stakes, different portions of your position, right? Sometimes it doesn't always work out like you'll think. So I ended up locking in completely on my Facebook position here. And again, it's because tech is a little bit overbought. I'd say Nasdaq 100 is. And Facebook was looking a bit toppy today. It sold off all day, went down 2%. And honestly, I could have locked earlier, but I locked in later in the day as we actually started crossing under 284. I was like, okay, let me just take a little bit or completely off the table here with Facebook. So I did that, and I'm not bearish on Facebook by any means. If anything, I want to re-enter this thing maybe at about 278, 280, maybe next week or maybe even tomorrow. But honestly, another reason why I got out was because tomorrow's Friday. We're nearing the end of the week. So I kind of wanted to lock in some more profits, go into cash, because Friday, for me, guys, typically is not the most active day. I like usually playing it safe on Fridays and, later in the week. So I took some profits there on Facebook. I also locked in on NIO today, guys, NIO, which also sold off for pretty much all of today. And it makes sense because yesterday it went up 20% from the bottom of the day to the top of the day. So 20% in a day is insane. So a little 5% pull down is pretty healthy. And another reason, really the main reason why I locked in today on NIO is because we're struggling here on the 5-day 15-minute chart at both the moving averages, right? They're both acting as resistance, both the 180 and the 50 SMA. You guys can see it here for yourselves. We failed breaking out of there yesterday at the close. All of after hours yesterday we failed. And this morning we tried breaking out, but ultimately we saw a big sell-off in the morning, and we just kept testing the moving averages here, 5-day, 15-minute, and we just didn't break out. So I figured, okay, let me lock in my profits here. Let me take the rest of my profits at $46 is where I ended up getting out. And I'm actually looking to get back into NIO, but probably not till next week. I kind of want to see it, do its thing a little bit more, play out, see if we do break the moving averages here on the 5-day, 15-minute chart. And honestly, on this hourly chart as well, I'd probably like to see it above 47, 48 before, I consider getting in. Again, maybe even $50, guys, just to be safe, right, on that, momentum. And at this point, yeah, it seems like the Bears could take it a bit lower based on what I'm seeing. So I wanted to play it safe. I got out of NIO, got out of Facebook. I'm still in Alibaba. Ticker symbol BABA, still on this one at about 269.35. I'm still in Alibaba, and I like the way Alibaba today was able to break 265, 266, old resistance stemming back from a couple months ago. We broke out of that resistance. We actually closed above it. We went up 2% today, so this is a good sign. We saw some pretty good volume on Alibaba today as well, so I wouldn't be surprised if this thing made a move back up to 270, 280 next week, and that's kind of why I'm still holding on to my shares, because I think it's oversold. And I think there's still some upside here. So Alibaba, I'm still in. Workhorse, I'm still in, guys, which went up a ton today. Workhorse up almost 11%. We broke above 22. We held 22 at the close of the market. Old resistance as a new support. This is very good news. And we could be going higher from here. I mean, guys, look, RSI is still beaten down. It's at about 43, so there could be more upside. I think Workhorse could get back into the mid-20s. And you guys saw what ended up happening, right? The USPS delayed the contract announcement to the first quarter of 2021. And what we noticed, and I talked about this yesterday, what we notice is, okay, when they delay the contract, we see a little sell-off, but then the stock kind of rallies into the expected contract release date, right, or the announcement, right? It happened last time in October. It's the stock tanked when they pushed it from October to December, the USPS contract, right? The stock tanked, and then it rallied into December. Now they pushed it back again, so we saw the sell-off, and now we might rally into Q1 of 2020 in anticipation, or 2021 in anticipation of the next contract announcement, which if it gets pushed back again, it's going to drop again. Then we might rally into the next anticipation, right? So you guys kind of get what I'm saying. So at this point, I'm in Workhorse at 22. I'm still long this stock. Apple's another one I'm still long at $112. I'm not selling this one. SLV's another one I'm still long in to give me a little bit of exposure there to silver. And EA as well, guys, which last time I checked, EA did well today. It was up earlier. Ended up closing down 0.9% on the day, and this one's looking bullish. I mean, we broke out of both moving averages here, 4-hour chart. We broke out of 130 yesterday. Now we're trading a bit under it, so I'd like to see 130 take over again, and I think it will. And then from there, I think we could be going to mid 130s, maybe back up to the 140s. So let me know your thoughts down below in the comments, guys. What are you up to? I would love to know what you guys are trading, and if you guys are enjoying the video, hit that like button, subscribe to the channel, and hey, maybe get yourself 4 free stocks from WeBull, linked down below. So DocuSign reported earnings, and I don't have any notes on it. Let's just see exactly what it's doing now. Some live action here after hours. It looks like it's up. It closed at 230, ended up going up to 240 after hours. It actually closed up 6% at the close of the market today. So this is very good stuff, and you can see, wow, volatility at its finest here, guys. Closed at 230, down to about 212, up to 250. Now it's at 242. So let's see, what did they do? EPS, 22 cents versus 13 cents estimated, so almost a double up there, EPS. And revenue came in at $382.9 million versus $361.15 million estimated. So a double beat there, EPS and revenue. And you guys can see here, is that guidance? They see Q4 sales of $404 million to $408 million versus $387.3 million estimated, and they see full year 2021 sales of $1.42 billion to $1.43 billion versus $1.39 billion estimated. So a double beat EPS revenue. They guided up for Q4. They beat the guidance of what analysts were expecting, which is great. And full year 2021 sales are also beating what the analysts expected, so that's even better. So that's why at the end of the day, DocuSign is up here. Excuse me, guys. My throat's getting a little bit dry right now, I'm not going to lie. But yeah, DocuSign looking pretty solid right here. Definitely one to watch out for tomorrow in terms of overall momentum here. It's definitely going to have that. And today we actually broke out of 230, big resistance here. And now we're about to test 240, 245. If 245 breaks, hey, DocuSign could be off to the races. And another one here, a bunch of other stocks. GME, GameStop. GameStop's been on fire, guys. Well, not today. It went down 3%. But earlier in the week, or was this last week? Either way, it broke out of this big resistance at about 16, actually more like $15. We broke 15, filled the gap up, or not even filled the gap. We just rallied like crazy up to $20, and now we pulled back down, filled the gap down to $15. Old resistance. It seems like we're holding it now as a new support. And hey, GameStop could be a dip here at this point, guys. In my humble opinion, I think it could be a dip. RSI came down to a healthy spot the past couple of days. Let's take a look here. 1, 2, 3 days. We've seen beautiful consolidation on $15.70 to $16. Now, all we need to see, in my humble opinion, is a breakout of this pattern. This is kind of like a descending triangle. So, it could go either way, right? If we break 16, we might be going lower to the downside. But if we break the 180 SMA here on the 5-day, 5-minute chart, we could be going higher, right? So take a look. Watch this resistance here on GameStop. If we break, let's say, into the mid-16s, 17s, I think this definitely could be a runner here. Ticker symbol GME. And another one here that I'm kicking myself, guys, that I didn't buy into is Nano Dimension Ltd, also known as NNDM. This is one that went up almost 20%. percent today. And I actually was looking at it originally a couple days ago, right? You guys remember the video I made back in the middle of November, roughly, when we talked about how NNDM was doing a share offering. The stock actually went down 25% that day. I think it was this day. It gapped down from 640 down to about $4. Unbelievable here, guys. More than 25%. It went down 35%. And from there, it's just been on a tear, right? It filled the gap down, held that 50 SMA 4-hour chart. I believe the next day after that share offering info came out, I think the next day it went up 20%, right? So you really had a small window to actually get into NNDM, and it went up 20% the next day, and ever since then it's just been going up and up and up and up. And again, today it went up another almost 20%, closed at 758. Now after hours it's up even higher. So me personally, guys, I'm not chasing NNDM at this point, but the way I'm going to approach it is any dip close to that 50 simple moving average, I think is a buy. 50 SMA here on the 4-hour chart. That's just my opinion, right? And always do your own due diligence, always do your own research, but every pull down we've seen to this green SMA is proven to be a buy. So not chasing it here, but if we can get to, let's say, 580, 590, 575, I'd probably start nibbling some shares there in NNDM. And another one here I'm watching, although it hasn't been doing so well after its previous earnings report, is Zoom. What we notice here is on the 4-hour chart, Zoom is holding the uptrend, right? But it's also downtrending, right? It's doing both, higher lows and making lower highs, and it's kind of squeezing itself into this wedge, right? You guys can see it here on the 4-hour chart, and we're under a big resistance right now, under 415, which I think if that can break, I mean, we could see short-term momentum get us up to 440, and then we might go and test that 180 SMA here on the 4-hour chart, which struggled last week on the 30th of November, right? And overall, I think if 460 to 470, 475 can break, I think that is where Zoom could see a big explosion. So I think there's upside. Honestly, I think there's upside here, especially with the situation we're in. Schools are shutting down, guys. Universities, businesses are still using Zoom. So 415 to 440, that's the move I'm looking at for tomorrow. Then from 440 up to 480, that's another move I'm looking for here on Zoom. GDX is another one, the gold miners ETF here. And I know gold stocks, they've been pretty bad recently, guys. No doubt about it, right? Especially GDX, this gold miners ETF. It's in this downtrend, but overall, I think we still can see some upside potential if gold ends up getting back here. And I know gold's more of a safe haven play. A lot of people are like, oh, we're getting a V-shot. The economy's going back to normal. Just throw gold out the window, right? But I don't really view it the same way because we're still going to get money printing, whether it's under Biden or if somehow Trump gets back in office. If somehow he does, who knows? But we're going to get money printing regardless, which ends up devaluing the dollar, and gold, well, it ends up going up in that situation. So I still think GDX has potential, down about $10 from its high here. And guys, you got to realize, if you want to get into these stocks, now is the time. And I'm not telling you to buy into them, but when you see stocks going down, that is the time to buy in. It baffles me when people just want to buy into stocks when they're near all-time highs, and when they're going down, the stocks, right, and in this case an ETF, they don't want to touch it because, oh, they're scared it's going to go down even lower. And sure, it could go down lower, but it could also break out here, guys, and there's a lot of potential if it does break out, in my opinion, from 35 back up to, let's say, 40, 42, 45. I mean, take a look at your consumer spending, right? Would you go to a store and buy the most expensive thing? Well, maybe you will. I don't know. I personally wouldn't, but I would go to a store and look for things on sale and buy those things, right? And that's kind of the same way I view the stock market here. And just because the stock is down a ton doesn't mean it's on sale. It could be a bad opportunity because it's down, but there are situations where stocks are down and it's a good opportunity, right? You kind of have to decipher that on your own, do your own research. But in this case, I think GDX, the gold stocks, they're pretty decent opportunities, and I'm kind of viewing them as on sale right now, and pretty decent long-term plays, and maybe even mid-term plays as well here. So GDX, watch this downtrend channel. PENN, Penn Gaming is another one I'm watching here, which broke out of this downwards channel a couple trading days ago. We broke the moving averages, both 50 and the 180 SMA here on the 4-hour chart. We actually recently just broke above $71. We're holding that now. And I think overall, this has potential to get back into the mid-70s, right? That's the resistance from a couple days ago and a couple weeks ago back in the middle of September. So watch out for that test here on Penn. DKNG is another one. DraftKings, good old DraftKings here, guys, on the 5-day, 5-minute. What we're noticing is a downwards channel, right? And I think the second we break out of this downwards channel into 51.50, $52, this one could be a breakout, and you guys can see it more on the hourly chart. Maybe a breakout back up to 54, mid-50s, heck, maybe back into the 60s. And we've seen a little bit of a correction here in DraftKings the past couple of days. It's down about 8%, and it's a much-needed correction, a much-needed little sell-off here on DraftKings. So watch out for this channel to see if it breaks out of the resistance, or heck, maybe it can go down even lower to the mid-40s. Either way, I think DraftKings is a good opportunity. CCL went bananas today, guys. Broke out of a big resistance here that we've been talking about at about, what, $21? You guys can see it here, $21, $22. That was a resistance from a couple days ago. The ascending triangle ended up playing out. We uptrended in to that 22 resistance. We ended up bursting right out of it. So at this point, I think there's more upside on CCL. Maybe we see some consolidation, a pull down, a retest back in the low 22s. But overall, I think we could end up getting back into the mid-25s, especially with this resistance break above 22. That is a lot. That's very bullish. A lot of bullish momentum is coming due to that. And another one here is Netflix, which has been chilling around 500, 475, 490 for weeks at this point. And I think the second it gets above 500, 510, there's going to be an explosion on Netflix, right? Maybe back up to maybe 525, 530, as we can see here from previous resistance points, maybe even 560, right? So watch out for 510 on Netflix. And Activision Blizzard, we talked about this one yesterday. I called it out on my Twitter today. It didn't pan out yet. We're still at that resistance here at about $80, at the resistance of this downwards channel. But I think the second it takes out, we might be seeing a huge pop on Activision, and we're already seeing volume starting to kick in here the past couple of trading days, so I wouldn't be surprised if we did see a pop out of here into the mid-80s, guys, so watch that out. Watch out for that on Activision. And by the way, if you guys don't follow me on Twitter, follow me at StasSurfS, and on Instagram at Stas, excuse me, guys, woo, my voice today, at StasSurfS on Instagram as well. And we'll wrap it up there. I definitely need a little bit of coffee, a little bit of water, some liquid in my throat right now. So I'm going to end off the video, guys. If you all enjoyed it, hit that like button, subscribe to the channel, and make sure to get your 4 free stocks from WeBull down below. Join the Discord chat. It's free. The Facebook group is also free. And also follow me on Twitter and Instagram at StasSurfS. So I'll catch you all in the next video. Thanks for watching. As always, again, get your 4 free stocks down below. Keep crushing the market. Stay safe out there, guys. Peace out.